Hello everyone, welcome to INR Bonds Search for Yields issue number 62. Myself Nikhil. Today I'll be talking about what are the options, what are the bonds for the fixed income investors to look for in order to beat the inflation in the coming year 2022. The current year, the global economies have witnessed a multi-decade high inflation growth. The US reported 6.58% inflation, which is a four-decade high, and the Eurozone reported 4.26% inflation growth, which is a multi-decade high. The domestic markets also witnessed a sharp rise in inflation. We have seen north of 6% inflation in the current year. The last 10-year inflation chart of domestic economy, where we have seen the inflation touching north of 12% during the 2010-2013, which is the aftermath of the 2008 financial crisis. The domestic markets, the latest inflation reading came in at 4.8%. Other domestic markets like Brazil and Russia, where the central banks have started to raise interest rates, and they have already raised interest rate as much as 4 times in the current year due to higher inflation pressures. The current in the latest policy meeting, the Fed also stated that they'll be raising rates as much as 3 times in the next year, and also set the inflation target at 5%. The RBI governor also also acknowledged that the higher core inflation of 6% in the latest policy meeting. If you compare the inflation targets set for 2022 and the pre-pandemic inflation targets, you will see a sharp difference between both the inflation targets. It's a clear sign that the central banks across the globe are planning to fight against the higher inflation. The real rates in the developed markets, in developed markets like US, Eurozone, and UK are negative. The real rates is the rate which is the net of inflation, the bank rate, that is the bank rate minus the inflation. So if a fixed income investor in India who is at a 30% tax slab and investing in FD, the FD yield is at all-time lows of 4%. The post-tax yields would be 2.8%. So the average inflation rate for this year is 5%. That means the FD investor lost 2.2% in the current year. It's the same case for the GSEC investor as well. The investor who is investing government securities, the spread is slightly lower because the government securities are at 6%. The current levels is 6.5%. However, still it's below the inflation rate. So so the current solution for the fixed income investors in order to beat the inflation is to invest into the corporate bonds. The corporate bonds currently carry which are offering anything above 8.5% will be able to beat the inflation of 6%. So the basic benchmark for any investor who is at 30% tax bracket in India, the yield they have to generate is 8.57% per year. So corporate bonds, however, the corporate bonds carry an additional risk than compared to an FD or a GSEC. The GSEC, where they don't have a credit risk, corporate bonds carry credit risk. So investor has to consult their financial advisor before investing in corporate bonds. So the three main points for the investors to watch out if he or she is investing in corporate bonds. The one is whether the issuer will pay back the principal on maturity on time, and whether they'll honor the on-time cash flows, that is the interest payments. The second is the liquidity, whether the investor will be able to sell the bond at any point of time after the purchase. How liquid is the bond? The third point is the bond covenants and the structure of the bond. All these three important points, the investor has to do the homework before investing into corporate bonds. On INR Bonds platform, we have a credit risk score parameter where the investor will get an idea what is the riskiness of investing in a particular issue. The higher the score, higher the riskiness. So coming to the point, given the interest rates cycle is changing, it is appropriate for the investor to look at the corporate bonds of maturity lower than 5 years. Higher the maturity, they'll be prone to the duration risk. So on QuickInvest platform, the investor can sign up and they can set the returns and the maturity as per their preferences. Here I have set the return bar at 8% to 20%, and the maturity of from 0 to 5 years. We have around 7 to 9 bonds on our QuickInvest platform. The investors can sign up and take a look at the bonds and consult the financial advisor before transacting. At the end, the corporate bonds will shield you against the high inflation rates and in the coming year. And if you're planning to invest in FDs or government bonds, it might you might lose out on your principal. Thanks for watching in. Do take a look at our QuickInvest platform. You can look at our curated bond list, and you can seamlessly transact on our platform. Thanks for listening in. Please subscribe to our YouTube channel if you have not done so.